Oh, I'm sorry. I didn't click the button there. All right, let's continue here. I said, so we're opening up here to what may turn out to be, I was going to say new world, but I guess it may be the old world of pre-Trump and, you know, corruption, America allowing itself to pay for everyone else's expenses and so on. I guess we survived it all these years. But I guess everybody's been concerned with the blooming debt, which is beyond belief, and more coming. Who knows? Maybe countries can just go on forever printing money. But at some point, I suspect somebody's going to say, you know, guys, you've gone too far. I'm not lending you any more money. I mean, that's what happens to us, right? You know, you're not able to pay back, and your paper is worthless. But so far, the trends are still up. Markets are backing off here a little bit. Pre-market, we'll see how far that goes. One of the things that we've talked about in pre-markets and MT Lives, and of course explained in courses, is that vertical movements are not sustainable. Now, prices can get extended in different time frames. So on the daily time frame, prices really aren't extended as we're looking at the futures here. You know, they've been really good about, kind of hugging the line of the rising 20 MA. So they have not. Now, we kind of look at that, from higher time frame and to say, well, when that happens, you're going to get a deeper pullback. So with prices advancing the way they are in what we call pretty much a self-correcting uptrend, which means there's a lot of overlapping bars and chop, which we've seen that has happened here. And then we had that little advance and pullback and continuation. Now, unless something happens to kind of shock this market, where it would just slice through one of these congestion areas, the assumption is it'll keep going up until proven otherwise. Now, we're all active traders and investors, so we're interested in what's happening on an intraday basis. And what we see here on our longer term intraday chart is exactly what I said, an acceleration of the trend. Now, I've put the red area up here. Um, it, it's not really that significant because it's new all-time highs. So nonetheless, we've got a pivot up here, and I can adjust this as time moves on as to, hey, as it comes down, I can lower that. And it's pretty cool. Different platforms have this anyway. So when you move it, it kind of, does it, and I use it on my other uh, system on NinjaTrader and eSignal like this. And it just makes it easier to adjust your charts to as different levels emerge. So we have that acceleration of the trend, which creates the price void concept. Now, it hasn't really violated any support. It's more of what's becoming, let's say, until proven otherwise, a bull flag, which a bull flag by definition is a momentum type of a move that eventually creates support. And you can see here, major support is well down here, but this is a little shelf of support right there. And on the bullish point of view type of chart pattern, this would make a lower high, lower low. It's already broken through the prior pivot low here, which is fine within an uptrend, but we've got this void lurking below. And so we'll just see how this actually develops over the course of the next several hours to see if we could hold this area. And if not, well, then we just look for lower areas. And so there's a little, shelf down here. And most significant way down here, which it should not come down to. So I've got this, what we call minor support area marked off here on the S&Ps. You can see is like about 38, 17, 20, or whatever. Let's call it 20. But so, ideally, if it should not come down there. It should stay. So this is a subjective reference point, but it should stay really up here, right in this area, and chop sideways and then continue higher if it's truly bullish. So As today progresses, we'll just assess how far this retraces or the lack thereof. Oh, Bro's asking me 37, 60, 3,800 pull back near 20 MA. So McGraw, if you're asking me about SPX, which I think I'll switch to that because the futures don't, 20 MA is down here at 60. I'm not sure. You didn't say. So it, regardless of what we're looking at in a situation like this, meaning rising 20, rising 50, we've had this little short-term top, the drop, we've overcome that area. So now we just go to basic retracement concepts, which are common sense, not based on Fibonacci. And that, look, this is a strength move. It's two wide range bars coming off of this support area. It shouldn't come all the way back down here. In no way should it come down here based on the strength of this move. Now it's created a void. So buyers need to step up and create new demand areas which aren't there yet, which makes this right now a little dicey as to the establishment of that new higher level. So in theory, if we that looks good for 3750, look good for tomorrow, 100%. It shouldn't go there. Should not go there. We all know that it certainly could. For whatever reason, we have no idea. But if we just, as we look at markets, we look at charts, right? We look at charts in multiple time frames, and we assess what it looks like historically and what is the norm. And then the norm is it should never go down there tomorrow. Right? What happens next week? What happens as new news comes out, whether it's job claims, whether it's whatever it is, we don't know. Uh, Something could drive it down there, but it's like, what should happen tomorrow? Well, I would say the worst case scenario, and let's say things get ugly for whatever reason, let's just call it 3,800. Right? And that would immediately begin us questioning uh, the possibility of coming down here. But as of this time, this should stay up in this area, decline a little bit, and prove itself as the bullish trend that we see on the daily and weekly time frame. SPX, we apply the same things. So we see gaps versus, bars, completed bars, because the futures are trading overnight. So, based on just today, right, while it could dip down below the halfway mark, by the end of the day, we want to see a candle body in the upper half and ideally in the upper third. If we to get a close down below today's low, well, then I would say that opens up the door to coming down here tomorrow. Let's see. Again, avoid a wide range bar is a power bar. You've heard me say before, it's the weakest link in the chart. And the same thing going back to this. That's an ominous looking wide range bar, which suggested possibly a 1, 2, 3 continuation to the downside into this area. Well, it didn't happen. It built up support and it ripped higher right through it because, the move down creates a void. So we have concepts and we have the ability to put those concepts together and to assess things in multiple time frames that suggests this should not go down there tomorrow. And I'll see what today brings. And where do you see the measured move up short term? Well, measured moves start from a move like this and then a correction bar. We don't have a correction bar yet. So what would have to happen for a measured move would be, let's just assume today ended like this, and then tomorrow gapped down. And by the end of the day, it rallied back up again. Then we would look at this move and then project it. Well, the distance from here to here and take the correction bar and then project it higher. And then that would be our assessment of a measured move. Now, typically, historically, measured moves do not occur at new all-time highs, right? Because they typically end at the next reference point of support if it's going down, or resistance up above. Um, so there's nothing up there. And then, of course, whole numbers come into play. Whereas if this turns out to be some type of bullish consolidation and we get a correction bar, well, yeah, we can say, what's the distance from here to here? And kind of we do this, and let's just say, and then we could duplicate that and just project it like that. And you can see it puts us up at the whole number. So a bullish consolidation here in a continuation pattern could give us a projection of 4,000, which is a whole number, which makes sense, but there's nothing to the left. And then we just go into our factory work and see, hey, does it keep going up? Does it break a prior day's low? Everything that we have as part of MTS analysis is factory work, right? Meaning this leads to that, and that then suggests this, and then we update the information as it's provided to us by the markets. And how it happens in multiple time frames kind of definitely puts a great area on it, but the more time frames we add, the more potential to get confused. So if we look at just the daily and weekly charts as a swing trader, it is, as I've explained, it's black and white. All right, so we've got the same thing going on here with the NASDAQ futures, two big green bars, power bars. There's a void below. There's the momentum move, the void below here. So when we talk about voids, which we did yesterday in MT Live, was that voids are made up of momentum moves and then time. So the time part of it is critical to adding to the potency of a void. Reason for that is the assumption is that a time correction here would result in a continuation move higher because it was preceded by a power move. Now, if that doesn't happen, you've got a whole lot of traders, funds, whatever it may be, that have accumulated in and there's been some distribution, otherwise it would keep going up, of course. But there's this accumulation where there's no support. And it's supposed to result in a move to the upside. Now, when that doesn't happen, it then would leave a whole area, and let's just assume that that is what happened. It would then leave a whole area. Let's say this went sideways. I don't know why it's not staying there. And then as it starts to break, that time movement away from whatever's to the left, and there's nothing to the left, opens up the door to sizable corrections based on what we're looking at here. Right? Similar to like what happened on the S&Ps that I just showed you over here. We only got one bar, but it went all the way back up and then just continued through the resistance. So, all right, I think that's enough education here. Otherwise, we're going to be into a mini seminar, but you guys got the idea. Same story going on here in YM. Uh, the Russell momentum is slowing down. It's been the leader. Uh, this little chop going on here, which makes it so much more critical that the Russell holds this area. Now, yesterday, it broke out and it was rejected. That's a concern. So we've got here what Dan calls, and it's not, this size bar here isn't that big, but, Dan has coined this many years ago as a bull sandwich or a bear sandwich, right? Big red bar in between two green bars, which is an area of consolidation. So why are prices being rejected after a resting period? It should have been a bar closing near the high, and it didn't. Now, it hasn't violated the low, but it's getting a little messy. Right? So we'll be keeping an eye on that. This is a critical area. Hope you all are seeing how some of this might fill your head a little bit as I explain it, especially if it's new. But after a while, the simplicity of this is amazing. And without all the garbage on your chart, called indicators and clouds and so on and so forth. Bonds are just chopping around here. They're staying bearish right now. The wide range bar staying in the lower third there, suggesting it's going to go lower. Interest rates higher. Something's happening with oil in my chart. Well, I guess they fixed it this morning. Probably changing contracts. I just used the continuous one here, but that's just chopping around over here. And I mentioned a week ago, keep an eye on the dollar. It backed off a little bit there yesterday. It's still in a downtrend, but as this starts to bottom out here, and if it begins to turn up, oil will come down. And oil having moving up as it is, and the market moving up as it is, and dollar going down, we start seeing the dollar going up, oil start going down, maybe the transports start to weaken, and which of transport would stay strong in the face of oil going up. But at some point the market is going to have a correction, and these are just some of the things that can give us a heads up. uh, Gold seems to be trying to bottom out again. A little breakdown failure here. And silver does look better. You like it for even a short-term move here to go up. And see the transports. I've taken a lot of time here this morning. Sorry about that. But transports got a big green bar yesterday. So overall, things still look bullish. Excuse me, trend is up. And we've got our assessment as to where prices should or should not go. All yours, Dan.
All right, good morning. Yeah, we're fully 100% bullish stock and option positions, and everything is fine. You can ask me if there's any questions. We did a couple new ones yesterday. Amazon put spread, that's gapping up 25, looks great. Apple, I like today. We were saying yesterday that over yesterday's high, both the put spread and a directional, it's gapping up here a bit, so maybe a pullback or 30-minute high. Now, Q's, we sold a put spread. It was just incredibly strong yesterday. Gap up to new high. We also did IWM, but as Greg said, that retraced a little bit more. And my only guess is people were chasing risk assets going back into technology and things. So the FANGs were very strong yesterday. Let's go right to gappers here now. 1329, a big gap here, but trading range. Look, we have a multi-month trading range, and look at my little monthly has a price void, 15 to 20. I wish this was gapping up less, but let's keep an eye on it. The monthly has room. And here's kind of what I call a two-headed head and shoulders. Left shoulder, head, head, shoulder. And now it's gapping under it. So that, I'm going to put that in a window. That looks great. We'll see how it sets up for a day trade short. And McGraw also call spread looks great. This thing wide range igniting yesterday, but the gap's too big. Awesome, gap's too big. Curtive gapping up, but that was an ugly shock pattern. That's what we call a bull trap. 30-minute high, you might get a day trade, but you're swimming upstream. Fubo, we actually have a put spread on this, way out of the money, 22 and a halves, way the heck down here. But this could turn into a swing trade. I'm going to put it here. Bullish pre-market, buy setup. So yeah, that's a definite 30-minute, I'll just come out of the gate and say 30-minute high because that's pretty safe. And then if we want to adjust our entry based on a bullish 5-minute pattern, we can do it. Open, gapping up to 31. McGraw, another put spread idea. F cell, gap down, 1587. Yeah, 30-minute low, 30-minute low, call spread. You know, I don't know. It's not, it doesn't look like a tier one. Let's look at it after 30 minutes. Um, 6. Yeah, we actually bought this breakout. Look at that little buy setup right there. There's not good volume, but yeah, I like 6. UAA got an upgrade. It's worth watching. It's gapping from a sloppy buy setup. CSIQ kind of neutral here. I like the red bar ignored, but it's, you got no good price void. Kodak, PCAR, Kodak 9. It could be the home run entry. You know, it's making the turn on the daily and weekly. I'll keep an eye on it. PCAR 94. It's a bullish gap over this red bar, but it's gapping right to that prior high, which I don't like. I might send the Dow 30. Look at Travelers. Travelers had a nice breakdown failure. We're in AIG long. Still looks great. It's a Fubo I mentioned, CDNA. It's gapping down, 95, extended. I don't know. I don't know what to do with that. Maybe 30-minute low. Could be a call spread. Apple we talked about. I'll be watching for an entry. No pattern, extended. Some of these are earnings or upgrades or whatever. Gap's too big. I don't like the way it trades. Look at the range of those daily bars. I just don't like it. F-SLY. We've been watching for the last 2 days as a put spread idea. Now it's gapping up on an upgrade. Mr. Bearish gap down. So this is a call spread candidate. The problem is it has earnings next week. I think on the 26th. I looked already. So a call spread would just have to be 1 DTE for tomorrow. That's a gap breakout on Gene, but I mean, look, $8 on the monthly is way the heck up here. So I got no interest, and that's a buy also. Be big, 593. Look, gap's too big. Look, $1.60. Wow. I don't know what the news is, but that is quite a turnaround story. TKR. All right, thanks, Clint. Glad I actually like that, because if we have a bullish pattern like that is, you know, they get the idea gets into people's heads, their marketing people get going, a bit of excitement about, oh, we're going to be reporting good news and earnings and new products, and you many times get these pre-earnings runs, and then we sell into it. We sell before earnings. What I like about TKR, what I like here, bullish consolidation. If it can get over this topping tail, then it's topping tail ignored. I'm going to set an alarm at 86. That looks good. Sono. It's just a continuation breakout and a strong trend. DD got a downgrade. It could have been working on an M top. We'll come back to it. Flux, gap and resistance, no interest there. UAL had earnings. These airlines are a big mess. I had my Siri just go off. AA had earnings, gapping down, breakout failure. That could set up for a day trade short. Rosas asking about any input for Q swing this week. Well, let's look. I mean, it looks higher. Let's just watch it here because it's pre-market. Look, pre-market it gapped up. It's coming in now. If this keeps going lower, then we got a lower high with a big price void. So our bias is still higher, but we need a little bit. We need some more information here in the first 30 minutes. YouTube's asking about Stone. I don't like the topping tail yesterday. So it's neutral. BKD. It's a deep retracement, but it's not bad. It's not bad. I like look at the monthly. Monthly has room to 6. $1.50 on a 450 stock is a good return. It's worth watching. All right, look at this Fubo I said I liked. Look at Fubo here. Could be a 30-minute high trade. All right, so AA, just, looks like a short-term top. UMPQ, no interest. These were earnings. SI, there's a top. Kind of a head and shoulders, just with this topping tail being the head price void. That could be a day trade short, 30-minute low. HWC is going sideways in an uptrend, no pattern. Interactive broker,